The following is a presentation of TFNN. The Power Trading Hour with your host, David White. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, David White.
And welcome all to another special edition of the Power Trading Hour. A very special edition, the good, the bad, and the very ugly as we come down here and test 2100. As I've been saying for a little while, I thought that the most likely thing to happen was a move down here to 2090. We've gotten to where at? Let's update this so I get the low in here for today. What is it? I don't think that's right. I think we got lower than that. This shows 2103 on the S&P cash. If someone else has anything else, let me know. I thought we got down to 2101, but maybe there's a bad tick in there. But I suspect we've got about another 14 points down, maybe a little bit more before we get a first bounce. Fairly typical to see support at the century marks, only to have them pierced. And then maybe you get a close back about 2100 and you think about maybe being long, but have to get it. Maybe the engineer's on his toes today. When we come back from the first segment, maybe he'll have Billy, Don't Be a Hero. But that's kind of my theme song for today. I don't see anything that's going to stop this anytime soon. Maybe Billy, Don't Be a Hero. What was it? Something in the Haywoods? I'll think about it. I think I've got it on this machine. Anyway, we've got everything we were looking for. We've talked about it for a while. Volume does not seem to come in when you get very long-term, medium to long-term highs and lows in the market. You don't instantly get the volume that you think you would. I saw this firsthand in about 2003 or 2004. One of my mentors, Tim Ord, who was on TFNN a lot, was pretty, I guess it was I want to say the March 2003 lows. Probably has to be that. Talked a great deal about some of the work he had done about looking at these long terms. And if you want a good book about very long-term investing, we tend to be traders here. I kind of think that in comparison to many around TFNN, have kind of almost glacier-like trades. A lot of people trading intraday. I tend to trade kind of on swings in lower and longer time frames. Tim Ord trades like in 2 and 3 year time frames, so they can be extremely long. So it's kind of tough, especially if you're trying to learn to trade. How do you learn to trade if you're not trading? If you only get like 3 swings at the bat, maybe you're great right off the bat. So you kind of trade small and fast, and then maybe a little less fast and a little bit more time. And I've kind of generated my way to kind of a happy medium. I'm not a quote day trader or intraday trader. I am much more of one to sit there and look at the close, not do much between most of my positions. I tend to put on about 10 a.m. or 10:30, maybe at the close of the day. And I don't try to do too much thinking. I kind of gather my facts during the day and then think about it a little bit farther off. But we will take some looks at this. As always, I like to come to you at this time.
The following takes place between 2 p.m. and 3 p.m.
Oh, Donaldson and the Haywoods. Billy, Don't Be a Hero. That is my thought of the day. We can just play music for the rest of the show. Or not. Anyway, we got big volume. We got 2.6 billion shares out here. Volume has been picking up for the last 4 or 5 days. As I've told folks out here before, let me go ahead and just pull it up. Every day I keep the volume from every 30 minutes of the day. Let's zoom in here. So I can see, going back every 30-minute increment. And, when you see some pushes out here, I don't tend to try to think about getting too much in the weeds. In fact, normally I don't look at these. I'll kind of look at it during the day, but I don't look at the 30-minute things until the morning. Normally I get up about 5:30 or 6, and I'll go through the data. There's always being a little bit too close to the news and maybe even the markets. That if you wake up, you get time to sleep on it. You don't act so impatiently. At least I don't. But a lot of different hosts make money different ways around TFNN. I am just one way. But you will find out that probably if you become successful as a trader, you will not just have one father. You will have many. There are many roads. I kind of thought early on that there was just one way to make money. And other people have been successful. I've kind of found a way that works very well for me, and it's much more kind of analytical and maybe even use a little bit more news than most, but it seems to work for me. Anyway, we've got a market, like we said, kind of flirting around these low levels. I suspect if we close under 18,000 on the Dow tonight, that will be the headline. It will also probably be linked to some political stuff. The market was a little bit jumpy last night already when President Obama wouldn't condemn the FBI director. This morning, that got a little clearer with some discussions from the spokesman for the White House. And about that time, we started seeing the market really move. It's not so much important whether it's true or not. When markets are jittery, it's kind of like during the Cold War when everybody would see pictures of all the commies standing over there in front of the Kremlin, and there'd be one guy that was standing a little closer to the head of the big cheese of the commies over there, and everybody would always think that it meant something. They were looking, well, look, he's joking with him today. He must be on the move in the Politburo. There's a lot of this kind of stuff when you don't have any information, you try to create some. But the market was already jittery, saw that. Then we saw Mrs. Hillary Clinton kind of throw Huma under the bus. That added a little bit to it. She kind of normally you say, well, these two have been inseparable for 7 years. And then she says, well, it's one of the people on my staff. Kind of like, I kind of remember, kind of think I know her name. So the whole idea was a lot of people on Wall Street started going, well, I'm getting nervous now. She may be throwing that wiener lady under the bus. And I think people started getting a little worried. I thought we were going down, but I didn't think we were probably going to get down here until Monday. That may have just accelerated a little bit about what we have going on. But it's all about holding probably 18,000 for the headlines tonight. Maybe make a few more people a little bit more nervous. But we'll get back to this and much more in a very special edition of the Power Trade Now.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Billy, don't be a hero. Come home with money tonight. Anyway, my take on probably one of the worst songs of all time. That and Seasons in the Sun. Wasn't that another one that was, I think, is like on the top 5? Billy, Don't Be a Hero, Seasons in the Sun. Oh, boy, there's some other ones out there. What else do we have going on? We'll just check in with Mr. Market out here. Okay, we've ducked under that 2,100 level on the S&P cash. If you're looking for a bounce, which I'm not, but if you were, I'd be looking at this 2090 level on the S&P cash. That's probably where you'd probably get the first bounce, at least daytime out of it. And that's just from experience. 2087, I think, is the number, if I go back and look, is where you'd want to take a stab at it. Other things we've got going on out here. Well, you know, we didn't do our history today. We know we need to get to that.
That it's all just a little bit of history repeating.
Shortly after its 103rd birthday, the Dow Jones Industrial Average takes a big slurp from the fountain of youth as it replaces 4 old stodgy companies: Chevron, Goodyear, Sears, Union Carbide, with 4 hot growth stocks: Home Depot, Intel, Microsoft, and SBC Communications. Not much going on out here. I don't think there was a lot else going on. Let's get to the market. It's moving fast, and probably what we ought to be paying attention to. Again, a market that's much more driven by news, at least right now, than the Fed. I don't think anybody's really thinking about the Fed that much. I think it's all political at the moment. And I don't know if anybody's really all that wound up about who wins or who loses, but markets hate indecision. And right now they're starting to think about the process and what would happen if we have a contested election. And that's kind of, I suspect, how the political log rolled starting last night into today, along with some other heads rolling. People are starting to think maybe there's a chance the election doesn't turn out the way that they were promised it was going to. I mean, we've got everybody doing everything they can. Dollar actually creamed here. It's off 71 cents, 79.73. So we do have the Treasury out there flooding the market with some dollars. The TLT, of course, the Treasury, very active today, too. We got under 130, and they've bounced this. It still is not really doing much for the market. It will over a number of days if they can keep the pressure on those 2 pressure points, or at least it has in the past. But we will continue to keep an eye on that stuff. As we start off the day, we want to start looking at some stocks. You can call in at 877-927-6648, and that will give us some time to talk together if you would like. You can also email me at path@tfnn.com, and, of course, post a message in the den. I'll try to keep an eye open for that. What else do we have here? Microsoft, a lot of people talking about an island top. It must be on the weekend, technically, out here. I've been thinking this thing's going to come back to the $53 mark. That's where you would probably want to look at it. I would not be surprised to see that happen. And that one is probably the best managed of the technology companies right now. More questions about Amazon. As we said, I thought Amazon is headed back down to the $655 to $600 level. You had a little bit of a push yesterday. Tried to get higher today. Volume is not all that exciting just yet. This area around the 750 level is going to be the kind of the first part of support. We did see this after earnings get down into the, I think it was about 740, maybe 738 level in the after hours trading. I suspect that's where this thing is going to come to, and you're going to see the first bounce off of it. But that's still a little bit farther on down. I want to see Facebook. Facebook after the bell tomorrow night. It's coming down a little bit. I don't know what else you can say about it. As I said a couple of days ago, or maybe it was yesterday. In fact, it was actually in the last segment yesterday. It just seemed to me like everybody that wanted to be long this thing was. There's not a good technical way of putting calipers on it. It's kind of a thing that at least I've developed a feel for, and that is the total lack of anybody wanting to go short and everybody wanting to be long, but no one else, seeing the volume, no real high spikes, just a lot out here of lethargic energy in it. It's down significantly. Of course, it's out after the bell tomorrow night. I don't see huge breakdown in the company. It's one of the stronger ones out here. I'm not one to be wanting to short it right now. They have cash. They have money. That means there's a lot more stocks out here that have the ability to have a much bigger disappointment. I don't think this is in the category of Amazon fall out of bed. But I do think it's made some very toppy-looking stuff, and it'll probably be toppy for a while. I would much rather buy this at 110 than try to short this today at 128 or even 130 earlier in the day. But my guess is that we could see some fairly big retracements in this. When we look at Google, we'll see how it's doing today as we get into the second segment. This is down. Volume is not really picked up. There's a double gap on this one that takes you to about $770, maybe $775. That's where you would want to look at this thing, about particularly buying it for a fall rally. See if there's anything else in this. Well, I think we've looked at all the FANG stocks, right? Facebook, Amazon. Oh, we didn't look at Netflix and FLX. Probably the weakest of the bunch right now. Not a lot of volume yet either, though. Just a big gap out here that looks like it could get back to 98. And another stock where you kind of have to look at it as maybe everybody that wanted to get long this stock probably has. Just seems like the sector was way overshorted, probably went way over the highs, and now has an opportunity to try to find some buyers. A lot of people burned, and it just pulls back and fills this, and maybe the next good place to buy it is at 105 or something. But just looks to me like there's not a lot of volume out here, but at the same time, not a lot of shorts underneath it. And, of course, kind of easy to see a stock like this fall fairly quickly when everybody is so bullish. Has just been run out because of a giant gap up. Not uncommon to see at least half of that gap, if not more, filled on these giant shoots that are basically short squeezes. I think the earnings on Netflix may have had it up $5-7. And that, of course, gets Mr. Mo on the downside. You can get that back and more. So not bullish on Netflix at all. We're at 2101 on the S&P cash. Volume 2.8 billion shares. Be back in a minute.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
And as we said earlier in the show, I'm thinking this is kind of some kind of longer-term top. I'm not expecting the market to rip back up before the end of the year too much. We might get a Christmas rally, but I suspect it'll be after Thanksgiving. We may need to consolidate down here for a while, even much lower. And again, I want to get through the election and see how that does. We're up about 9 points off the low of the day right now, maybe 8 points off the low of the day at 2105 on the S&P cash. The problem is we're still off 20 points going into a close. We have massive volume of 2.8 billion shares with an hour and a half left to go. This could be the highest volume day since September 1st. And there were bigger ones. I just kind of look at that date as the day that we actually started seeing volume start to build out of the summertime. So 2105, the markets are probably going to get fast, going to get a little jiggy on us, but we continue to keep an eye out here. Well, we'll continue to look at more stocks. Dano from Lutz, Florida. He didn't tell me where he's from, although I think he's from Clearwater. Looks at buying November 18 puts on JetBlue. And do I see this going to $15.75? The answer is $15.70, which is the previous low out here. I'm not a big fan of buying puts on stocks below 50 bucks. In fact, I like stocks that are more than 100 bucks. There's kind of the law of large numbers and makes it very hard for a stock that, is worth $400 billion to become $800 billion. It's 10 times more likely a stock that's $5 goes to $10 than one, that's a huge mega cap stock doubles, right? So I tend to buy stocks that are fairly low priced in dollar value when I think I've found some kind of bottom in the market. I'm far more likely to buy something or puts on something like Priceline at $1,500 than trying to buy puts on something that's $18. You got kind of the law of big numbers and small numbers working for you and against you in those scenarios. So I'm just not a fan of it. It's not that you can't make money, but it's just so much easier to make money. If you have a price line at $1,500, the chances of it going down $200 are a lot better than a lot of $18 stocks going down $2 for the most part. I mean, if you have the nice setup and everything, I would much rather see that scenario or Google or the other ones. I just took Priceline because it's not mentioned near as much as Amazon, Google, Facebook, all the rest of them. But when I short the IBB, I normally buy puts. That's a great thing. It moves fairly quickly. It can move $30 down or more. So I'm always looking at those kind of things when I think of shorts. I'm not thinking of 16 or 18 bucks. In fact, I don't short stocks in the equity less than 30 bucks, except in rare occasion. And I actually did it in the last couple of days, covered it. I think I was 20 cents to the better on the short. They just never seem to work out as well and as quickly as others. I suspect that there is a reason, and I brought it up before, and that is that stocks like Priceline, people actually shorting the equity, very rare, and only the biggest people on Wall Street will do it. So you don't have a lot of flaky people that will, as soon as it goes up a dime, start buying and cause a short squeeze, like you will in something like JetBlue. So a few things, and I try to keep rules are not regulations for me, but for the most part, short stocks over 30 bucks with the equity over 100 bucks. Like to start picking up puts, and very high, of course, only thing to do is actually buy puts or calls on a $1,500 stock. And your risk reward, amazingly, if you're right, is so much bigger out here. One of the things you can look at is the money made in something like Chipotle over time. when this thing was 758. This thing's still, at the point where it could go much lower. But to me, having a put back up in this one, even if it was an expensive put, from 758 down to 399 is much more important. So I will just give you that. Okay. Jeff Kissimmee wants to know, he's got a $15 November call on UVXY. I was wondering if it's time to fish or if I would cut bait a little longer. My thought is if you were long volatility, that you probably want to be long volatility till Monday, right into the election. Because my guess is that even if the market doesn't go down, volatility will go up. People will start buying puts. That'll make the premiums go higher and make your UVXY go higher. It's kind of tough for me if I had already bought them to get out before Monday. Tuesday, you might have early returns that really move this thing against you, but I don't see any reason why not to sit on your hands unless something drastically changes. And it doesn't look like it will to me. 2106 on the S&P cash. Did we say who that? Jeff and Kissimmee. Yeah. Not in Lutz. So what else do we have? Window dressing, yes. They broke the windows today. That's apparently 2107 on the S&P cash. One of the other ones that I thought is kind of bucking the trend out here is Win. This thing has bounced a bit today. No real big signal out of this one, but a lot of volume today. And, when you look at what's going on there, kind of a bank shot on what's going on in Yum. Is it 2 M's or just 1 M? I think it's just 1 M. And this is all about on Yum. They're how can I say this? They're let's do this again here. They're going to split the business. Is that right? That can't be right. There was like some kind of split, right? Take a quick look at here. Yeah, there's a split that didn't end the data yet today. We'll try to get to it in the break. Anyway, it's only off $1, but they're going to be selling off their China part, spinning off the China part of their business. Probably a good idea. You know how much I dislike Chinese companies to begin with. I think they're kind of smart to do that pre-issues that may be coming up politically over the next few years. So we'll be back in a minute.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
And what do we have going on here? Just checking my mail. Let's see out there. Got a couple of these to get to out here. Let's take a couple of looks at maybe some of the other stuff going on out. Wanted to see how some of these stocks, there wasn't much out here giving signals when I did my scans. Cray was one of them. Unfortunately, this thing looks like it's really going back down to the $18 low of August 24th. Got a lot more emails yesterday and today about taking a look at FireEye. Still don't see anything out here. We still within a couple of cents of this February 12th low, and you want to look at the volume coming back in here. But so far, not so bad. What I dislike, of course, is the energy did pick up off the last July 28th high. That means that we're probably going to have a little bit more consolidation in these before they get going. Hog was another one out here that some people were asking about. This is up against its previous high. It's doing so. The spike on July 29th came in with 11 million shares. We spiked it yesterday with just little less than 5 million shares. It's kind of pulling back. Again, not a lot of volume so far. So the ones that have been running the hottest out here, starting to give at least a few signals. Okay, let's see if there's anything else. Let's go back and look at a couple of the ones from the last few days. Wanted to look at those. Someone brought this one up on one of the other shows, and I'd been short it, got stopped out. Didn't like it, but wanted to bring this up as a sign of maybe weakness in overall in the semiconductor / tech space. And this is Digital Realty Trust. These guys rent office space to startups in Silicon Valley. This thing spiked all up to 113.21 and has kind of been under pressure out here. I think, especially for tech stocks in general, what you want to be watching is if this thing does break the $89.18 October 6th low and does so. Right now, a little over 1 million shares, so a little less. But these little bounces have been continuing for a great deal of these stocks, so keep an eye on that. Finistar, we were looking at this last week. We'll do a little bit more about that. I was thinking that this comes back to its double gap at 25. Kind of going sideways out here, not a lot of volume just yet. Let's see, what else? GoGo. This is the wireless internet company that was going to take over all of wireless internet on airplanes. They were let their egos get the better of themselves. A lot of hubris. Chutzpah. I always heard that was the definition of chutzpah was being in court for killing your parents and telling the judge you should have leniency on you because you're an orphan. That kind of just in-your-face stuff. This looks like it's probably has a chance to get back at least into this gap at about $8.50. We're going to tuck back in here, but a lot of these stocks just look like we've got a little bit farther to go before I would start thinking we've got some kind of massive low put in out here. Groupon, it just came out with earnings. Gap down on it. Not unsurprising, unfortunately. This is another one of these stocks with massive short interest. Tom and I were talking about this one when it IPO'd and how easy it was to figure out this was a stinker, kind of like GoPro. This the same thing. Too many, it never passed the smell test. This one had a questionable CEO, also had a questionable business plan. A business plan that you can't create moats with, that other people can do exactly what you want to in about 5 days if they set it up, is always a problem. That has been Groupon's problem since the get-go. I don't see that many more in my email box. I signed up for it just to keep an eye on it. But again, one of these stocks that's perpetually short, you're going to have huge rips on it like this thing is have. But it's at least down to its first gap, just under $4. It's got a gap down at about $3.50. I suspect that with this movement, that's kind of a minimum target to the downside is $3.50. More likely that we see this low on June 27th at $2.92 tested. GWPH. We talked about this one as the marijuana stock. If you're really interested in this sector, this is not looking all that bad. You may want about 112 or 113 to take a stab at it. You have the sign of strength on the 26th of September, 3.35 million shares, and we've had about 10% of it. In fact, it may be the best looking stock in the market right now. My guess is that after the election, what do we have? 9 states that have marijuana up on the ballot. That would probably move that stock a lot more. I wouldn't want to jump in before all of that comes through. If everybody, I think last year in Florida they tried and didn't get it legalized. So what's that? Wine Holdings. Home Depot. I was checked back in on this one after it had rather disappointing earnings. It had already been in a downtrend for a while. You've got a double gap. I thought this one was headed back down to about 114 in this double gap that springs from the gap up of the 12th of February and the gap down of the 11th of February. So you've got that kind of thing setting up as a target, about 114 on Home Depot. Energy is significantly stronger already than from this August 2nd top. So we could have a longer-term high in this one, or at least for a while. And what else do we have out here? Some of these other Matchrit. This one is blown through today through its gap and sign of strength that goes back to the 19th of November of 2014 in the last couple of days. What do we have? Yesterday you had 1.9 million shares, 1 million shares are today. This gap up occurred on that November 19th, 2014 day with 5.6 million shares. So there's some that would come back into these trading ranges, might be potential buys. That one's a little bit more scary than others. Let's take a look at some of these others out here. See what else is on it. Netgear. Let's check into this after it had earnings. You got to hate the high volume down day of the 27th. No, we're going to break here anyway. High volume down day was bigger than the volume up day of the 28th of July. So this one's broken. See where this thing could go. 44.71 is the next major low on net gear. Be back in a second.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Catch Tom O'Brien, professional trader and educator, founder of TFNN. Also, a special guest on CNBC. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
Well, we got to watch the end of the day out here, but my guess is that the headline on most newscasts tonight, non-financial, will be that the Dow closed under 18,000 if it does. Kind of set the hook out there for a bearish view on the markets going into the election. We've got all the volume that we need already at 3.03 billion shares as we go in. So this may be the strongest volume day in 2 months, maybe a little bit more. Very interesting action. We covered a great deal of it out here. Andy Heck had a couple of questions in the den out here. Ask about Freeport-McMoRan. This looks like it's kind of in a consolidation to me in FCX. That would be, you want to get one more move down here to the $9. What is it? 9.24 was the last low. I would think that this thing's going to come back in one more time into this into this $9 range. And if it comes in there with light volume, that would be it. You had what James Wyckoff called the automatic rally. But unfortunately, you tested the June 14th low of $9.82 with 33 million shares, tested it with 47 million shares in this October 13th, and that's what you need to test. My guess it'll go a little lower, $9, something like that would probably be a longer-term buy out here. So I would not be surprised to see maybe a little bit more room on the upside, one more move back down to the downside, and the possibility of a long-term buy out there. What else was out in that FCX SCCO? You got higher volume today than the June 23rd high. Had 1.2 million shares that day. Got into it today with 1.5 million shares. Wasn't able to hold that high. Energy off the 2490 low was good. Looks to me like it's back into the trading range. You would probably want to look for something like a 50% retrace. Would get you back to about $27, maybe $26.75 during the day, and that is where you would want to see that come back with light volume. And at that point, maybe that's the next buy. If you're long this thing, you would probably want to hold it and hope for the $29.25 gap going back to May 3rd on this. So if you're long, you got to be kind of greedy and go for the $29.25. If you're thinking about going long, I don't see anything short in these. That $26.75 range would be interesting. I don't see a great deal out here. Let's see, go back a little bit longer out here. There just haven't been a lot of stocks that have been able to get these big gap downs. In the case on this one, this is the May 3rd gap down in Southern Copper. That has been fairly decent resistance. So if you got up there, that would be the sell signal. I don't know what else you can say. No real, I mean, you're down on a lighter volume. This is kind of the first time getting back up into this big resistance area just above 29. So, if you would have sold at the open today, I would have thought that was okay. If you're still holding this thing, then maybe you hold for $29. But you'd need a lot of volume at that $29 level. I would suspect that you got just about everything that you should be looking for off that June 6th low. In the meantime, so when you can, not when you have to. We'll see you tomorrow. Same bat channel, same bat time. Thanks for joining us on a very special edition of the Power Trading Hour today. That is one where the market went lower.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
You're watching Tiger TV.